Well, for more on India and its economy, let's bring in Ankur Patel. He's a former Chief Investment Officer at R Squared Macro Management. Thank you for joining us.
Thank you for having me.
Now, Modi is really defending this high banknotes ban, and it's also become a real election issue for his critics. So how is all this playing out in the economy?
Well, the short-term effect has been very clearly negative by removing so much cash from the economy so suddenly. It created basically a liquidity crunch, and that hit consumption, which is the biggest driver of Indian economic growth. I think longer term, though, it will have some positive effects. It will cause more Indians to be part of the traditional banking economy. It will boost bank deposits, increase lending. It will ultimately boost and support tax revenues and cause inflation to fall. So the jury's really out on the long-term effects, but the short-term effects have been very clearly negative.
Now, we do see that most economists have been waiting until July when the GDP figures come out to really weigh the true cost of this initiative. But how much do we know about the outcome of Modi's desired effect? We know he wants to cut down for tax cheats, wants to make it more difficult for drug dealers and really help the country's poor. Are we seeing any of the effects of that yet?
Unfortunately, very little of the effects, actually. I think Modi will really need to crack down on the transaction channels that the very wealthy use in order to evade both taxes and also big causes of corruption and bribery and the like. And that happens through a lot of the financial channels that include wires, overseas transactions, really channels that are non-cash based. And unfortunately, this ban doesn't do much to affect that.
Now, this ban has really been the main focus, but a lot of people see it as really part of Modi's greater plan to really transform India's financial ecosystem. How much confidence do you think that's instilling at the moment?
I think it's been a very much a mixed bag. I think one thing that this will do and has done to some extent is it has caused mobile payments providers to take another closer look at India and really accelerate that move away from cash to maybe a cashless economy. And I think those implications are actually pretty substantial. In the short term, not a lot has happened, but I think it will accelerate that move over the next year or two.
Now, let's also look at the Reserve Bank of India. Most people expect them to cut rates later on this month. What are your thoughts on whether that's a good or bad idea?
I think that's a very good idea. I think it's going to be very supportive of the economy. I think what you've seen so far is that inflation rates have fallen. The Indian economy has very much stabilized after the ban. And even without the rate cut so far, I think you're seeing interest rates fall as bank deposits increase and general borrowing appetite has fallen. I think what the RBI rate cut does is it accelerates the interest rates move lower. And I think if you look later this year, borrowers that return to the Indian market will have much lower rates than they had, say, 6 months ago, and that will spur economic growth into 2018.
Now, we're going to jump much further ahead, actually looking more towards 2050. We saw that PricewaterhouseCoopers is saying that India will overtake the US to become the world's second biggest economy behind China. So how do you think that's going to really impact relations then between India, the US, and China?
I think India will have much more negotiating power when it comes to negotiating trade treaties. I think for a long time, India's been this very quiet player in the global economy. China's certainly taken a lot of precedence after its entry into the WTO in 2001. The U.S. obviously has been a very dominant player as well. I think over the next couple of decades, India may negotiate trade treaties very much directly with its other trading partners, and it will have a much more substantial voice. And I think that will change power dynamics when it comes to economic agreements in the very long term.
And as we explore some of these growth forecasts, many researchers expect growth should average around 5% per year for the next 3 decades. Which sectors do you think will really be fueling that growth?
So the biggest engine for growth in India is private consumption, largely off of India's very large and very young demographics. And the sectors that are exposed to that, including things like consumer discretionary, telecom, media and technology, the financial sectors, IT, for example, those are the ones that will substantially benefit. But again, it's very much a private consumption story.
Now, another thing people are looking at is the level of mergers and acquisitions that we can expect to see. We saw the US-based law firm Baker McKenzie said that strong domestic demand will help triple inbound and domestic acquisitions into India, really making it a global hotspot for investors. So what sort of M&A activity do you think we can expect?
I think a lot of the M&A activity that you'll see over the next year will be inbound transactions. So transactions where basically multinational corporations around the world are trying to get access to Indian markets by having those transactions directly with Indian corporations within India. I think what happened was in 2014, as India's economy was recovering, you saw a lot of inflows through bonds and stocks. Now you're seeing those transactions in the form of FDI and M&A activity. And I think longer term, I think you'll see some outbound transactions where Indian corporations start investing in developed markets directly. But again, the sectors that will benefit the most when it comes to M&A will be the IT and telecom sectors, consumer discretionary certainly, and the financial sector.
Certainly the country's strengths. Thank you so much. We'll have to leave it there. Ankur Patel, former Chief Investment Officer at R Squared Macro Management. Thank you so much.